Hi, this is TFNN Signal Box, and what we're going to do today is talk a little bit about the features you're seeing in front of you, what's going on behind the curtain with the algorithms to produce these signals, and how this may apply to your daily trading and hopefully enhance that trading with increasing the probabilities and increasing the risk-reward scenarios. Okay, so looking across the grid here, let's just identify a couple of things you're looking at. We've got a timestamp up here showing green. If it's green, you're connected and active, showing the last update per minute, New York time, and if it's red, it's not connected. It's pretty simple. We've got a video over here which is basically going to kind of go through the explanations of quite a few things. We're also looking at a grid in front of us that's showing, and this is something we're going to get into later in this video, our Vega algorithm, which is either red, light red, orange, green, or light green, or not active by just showing a white box. These mouse overs that you're seeing are showing the top, the bottom, and the POC of what we call our boxes or dynamic VAPs, and again we're going to kind of pull this apart and define a lot of these things. You're seeing the usual suspects of the commodities world over here. You're seeing indices that generally will affect global markets as they move around. And you're also looking at the usual suspects of the currency world. And we've got a real quick and easy, very simple little identification grid at the very bottom. And I know this looks extremely simple, what's in front of you right now, but behind the curtain there's quite a few things going on, and we're going to get immediately into some of the math behind what you're seeing, how to read this, and how to basically leverage some of this information in your favor to create high probability trading situations, and how to increase risk reward scenarios when those trades are on. I think the first thing we need to do, since most of this information that you're looking at is based around our version of market profile, our derivative of it, and how those particular derivatives act and produce some of these signals, I think what we want to do is just go over a basic premise of market profile, and then that'll bleed right into our version of it, and we'll bring up some charts and take a look at some of the concise concepts that we've developed. This is going to be the quickest education on market profile that anybody's ever done, and if you find somebody that's done anything quicker, I'd like to know. So we're going to go through 4 slides here. So here's a slide on based on the original market profile and the concept there within. So I just want to kind of state what this is here. The original market profile identified the day by 30-minute sections. Okay, so the first section, it wanted to identify what is the price span in the first 30 minutes. Well, obviously 1070 to 1063 in this example. The next 30 minutes, 1066 to 1072. The next 30 minutes, 1065 to 1072, and so on the rest of the day. Labeled that first 30 minutes B, the next 30 minutes C, the next 30 minutes D, and so on. At the end of the day, all that information was collapsed onto itself, as you can see ultimately here. So this is basically the day's span of price action versus time, and this is basically our time at price grid. So the high volume node, or the price that stayed in force the most often for the day, was 1072. Okay, now drilling down past that information, we've come into something that looks like this. It's virtually the same in that example as you've seen on the very end here, but we're just going to kind of drill down into it a little bit farther and identify, what is the most well-traveled part of the profile, which is, if you look at this as a bell curve here, you'll see that this is kind of the meaty part of the bell curve. I hope you see that. And one of the things we want to identify here also is these are areas of price that really were the least frequent prices, and they were omitted by most market participants. This area was statistically advantageous to sellers, and this was statistically advantageous to buyers. This is the area we're going to be concerned with right here. This is the area that I will refer to as boxes in the rest of our presentation. The unfair high, as we call it right there, the unfair low, and the point of control, which is the most highly traveled price in the grid. This is a real-time charting example of exactly what I just talked about, analogous to real-time charts and what we call our unfair low, our POC, point of control, and our unfair high. Remember, this is that meaty part of the bell curve that we talked about turned on its side, that we explicitly said that we will be mainly concerned with this area right here. This is a weekly chart of the S&P 500. This unfair low is again 1644.30. We have come down into this, and this is the bottom of what we call our fair auction. Now, we could go through this literally for 8 straight hours about market profile theory, but what I want to do here is compact it into a very concise dissertation today so we can use Signal Box Web to look at signals, look at inflection points, and figure out how to actually kind of throw all this subjective dissertation out of the way and literally just take the signals for what they're worth and understand how to be patient until this market kind of comes to you and tells you, and you tell the market what to do, and so the market telling you what to do. Now, drilling down into different time frames from our weekly, I want to show you our daily, which is right here. On this time frame, unfair low 1677, POC 1687, unfair high 1705. We'll strictly be concerned with unfair lows and unfair highs here. The POCs will kind of leave out. So this is the bottom of our well-traveled area, 1677. This is the top, 1705. And this is our daily chart. Now let's go down into our 240. Now we see on this time frame, again, just to, not to bore you to death here, but just to kind of follow up on different time frames. 1657 is the top of our box. 1642 is the bottom of our box. Now, how does that relate to market profile? These are the meaty parts of the bell curves, remember? These are the areas I said we're going to be concerned with. These are the areas where markets have determined this is a fair auction. Outside of these areas is what's considered an unfair auction. Remember, this is, if you look into market profile and read a little bit about it, and we also, we'll give webinars on the weekends about this type of thing, and maybe you can get a very deep understanding at some point. But when we are below profiles or above profiles, we've been below profiles lately on the 240 minute on our S&Ps. Sometimes you find holes in the marketplace and price moves quickly away from these profiles or gravitates back into these profiles. So remember, just a general rule is sometimes when we find support and then we break through that support, form of support is used as resistance as it is in this instance. All right, so this gave you some great leverage points that will be defined on the Signal Box Web grid as inflection points, and I'll go through this, that give you high probability trading opportunities. I'm just kind of going through the charts here to give you a little background on market profile and what these boxes or profiles and our derivative of this market profile actually means. So now let's go back into our market profile grid here, and let's take a look at our example, the S&Ps. Here we are, this particular grid. Now, what we've done is we've made this real easy for you. What we want to do here is understand that as we talk about things today in this video, we have a weekly grid, a daily grid, a 240-minute grid, and a 60-minute grid. 4 profiles exactly as we looked at the charts before for all these instruments, and it lets you know when these inflection points are happening. We're going to focus on the S&Ps because it's kind of the hot topic today. Today is August 20th, and this is real-time analysis. All right. The good news is you can take signals literally carte blanche on red or green signals on different time frames that you want to trade on different instruments. All right, that's the good news. So what we want to do is focus on the S&Ps. This bottom, what we've done here is really neat, I think, is we've provided you the top, the POC, and the bottom of our weekly grid and any grid that we mouse over. So we're giving you the top 1705, which is just what we looked at on the weekly chart. The bottom is 1644. I'm going to pull back up. I'm going to pull back up our weekly chart, and I'm going to reiterate that 1705 is the top and 1644 is our bottom. Now, if you subscribe to our market profile theory and you feel that this is important in your daily trading, then you also would feel that 1644 is a great inflection point. You would also feel 1705 is, but we're at 1644 right now because this particular grid is telling you we're at the bottom of our profile and we're within a 10% value of that range between the bottom and the top, which is 1705 minus 1644 times 10%, to give you this arrow telling you that you're above the bottom of the box and within 10% of that height of the box range relative to the bottom of the box. I said a lot there, and I'm sorry, but I think you get it. We're basically right sitting above the bottom of our box, and our price right now, in reality, real time, is 1646.25, as you can tell right there. Okay? So why is this important? Let's go back to our signal box. It's telling me that we're reaching a long-term inflection point, and remember, weekly inflection points take precedence over daily, take precedence over 240, take precedence over 60-minute time frames. So this is the biggest leverage point that we could pick out, and it's happening right now. Now, our daily, we have been short Vega or below profiles for 4 bars for 4 days. Everybody knows, if you've been watching the S&Ps the past week or two, we've been diving down from below our most current profile, and I'll show you this. And this is how this signal works. We turn red on our daily. And this signal was given when we started traveling below 1677. Now, on our market videos, I talked about this and using it as a leverage point to short, because we had some other things lining up on our videos and on the charts themselves, i.e. going into our weekly, we noticed that we had some divergent action going on here, and my market commentary was to look for areas to possibly have a rollover. All right. Now, if you're not watching the market videos, no big deal. Really, this particular grid kind of tells you, hey, we're in short mode. Vega has turned short. Okay, now that we've determined that we're at the bottom of a box, we're at a very high probability situation where we're coming down in there, and Vega has actually indicated that we should have been short at 1677 all the way down into this 1644 area. Now what do? This is real time, and we're trying to figure out how to analyze this. Well, we've got some things in our favor. We've got Vega, which has turned green on our 60-minute, which is the first indication that we've cleared an unfair high on a turnaround possibility. So we're coming down into the bottom of a box. We've got an arrow up saying we're now either if we have crossed below it or above it, we've got confirmations that the first thing has turned on a short-term basis. Now remember, this is our 60-minute grid here, and this is what you need to look at for market turns around these inflection points. You need some confirmation, and this is giving you that confirmation that, hey, it's okay to go long here. We're starting to get above profiles on some level. If we get above profiles here on our 240, that's going to give us more confirmation. But we're also going to say that, you know, if we have bounced here and we are validating that bounce, then we've got some targets up here to contend with. The top of our box, which we would have to clear to initiate Vega, is 1657, as you can see there. So our first target, and the S&Ps are trading about 1646 or 7 right now. Our first target 1657, because guess what? We're going to have a top show up here as an inflection point at 1657. All right. Now, where's the bottom of our box that we blew through to initiate this whole short move at 1677? That's another inflection point that may arise, but again, that's after clearing, if it does clear 1657. So as we, to sum this up, as we come down into inflection points, bottom of our box on a weekly, you're looking across the entire grid for inflection point lineups or weekly or daily inflection points to appear. This is great timing to do this video, to be honest with you, because we've had a decent sell-off. We've come down into support here. We're actually still in, as far as the long-term trend is considered, we haven't closed below support yet on our market profile theory. So therefore, it's okay to buy bounces when we come down into inflection points still. If we close or continue south below the bottom here of this box, and it will tell you that on this particular grid, then we've got some compromisation of the long-term trend, and the intermediate trend, actually has been, in short mode since 1677. I've said a lot there. Again, we're going to review this a little bit more, but let's just kind of go back to the charts and take a look at what's going on relative to this 60 and the weekly. Okay, looking at our 60-minute on the S&Ps, and again, this is real-time analysis here. We want to take a look at, Vega is green, and we're clear. Remember, market profile theory, it's okay to be long above profiles, but not okay to be short. So if that theoretically states that fact, and you subscribe to that fact, and it's okay to be long here on this time frame level, and guess what? You're getting confirmation, at least on one time frame, that we could be possibly bouncing validly from our unfair low on our weekly, which is the strongest inflection point that we see on our signal box grid right there. And we know that our stops more than likely should be, stops are based on a couple of things: your appetite for risk and valid levels. All right, I'm saying uncle below 1644 relatively tight, and that means in the neighborhood of 1640, 1639, something like that. I'm going to risk a couple of points to make quite a few here. So going back to our charts again, and I'm going to charts to kind of show you visually what's going on behind the scenes here. When I look at Signal Box Web, I don't look at the charts a lot. All right, here's our weekly again. Here's our 60-minute. All right, now we're getting some valid moves up because we're clearing profiles, and remember that strong inflection point at 44 enabled all this thinking. Let's take a look at our 240 here, because I'm going to drill down into that on our Signal Box Web grid, and I'm going to show you where we're at relative to boxes. We're within a profile, and remember I talked about a first time target at 57. All right, that's going to show up as a target on that grid on your Signal Box Web. Now, right now, we're in the middle of a profile. There's nothing going on. We're not near an inflection point at top or bottom. But remember, it's okay to be long here to start this process by way of our light green first bar flashing grid on our 60-minute. Now, if we get back within this box, it's going to tell you, hey, we are getting stopped out of this trade on a short-term basis, and you know what? Let's just wait. We're talking about combining multiple time frames on this grid to try to confirm that it's okay to move in a certain direction based on trading around high probability areas like weekly inflection points, daily inflection points, things of that nature. If you're looking at the Australian dollar, we have a very similar situation. We've got confirmation moving up. We're clearing 90.74, right? Vega's clearing that. Our weekly unfair lows are 90.78, right? So now, even on this product, it's easy to read. It's okay to be long here, and you know where to put your stops. You put your stops below the bottom of the box, 90.78. That's super simple. And if we get stopped out and we kind of get back into that game again above the bottom of the box, you know you're just going to turn the wrench the same way, get back in the trade, put the stops in, boom. It's brainless is what it is. So, and I kind of need brainless at this stage in my life. I don't want to overthink trades too much. All right, so again, you can wait and be patient and wait for things like this to happen. Like there's a top we have on silver. We're right below the bottom of the box. Excuse me, right below the top of our box. We're right above the bottom of our box on the S&Ps. But again, these smaller time frames are giving you guidance on what to do around these inflection points. So going back and focusing on our S&Ps in general, I think what we've learned today is that we're identifying very high probability areas to pick battles. And those are high probability areas, in my opinion, on weeklies and dailies. We've also seen how Vega, just by trading green and red blocks, can be a very profitable situation. It doesn't have to be, but can be. When you use those in conjunction, those color-coded systems in conjunction with inflection points like this, I think you increase the probabilities 5 and 10-fold. But if you're going to take these signals, for instance, we took the short signal on the daily. Is it time to maybe say, look, enough's enough and I need to think about taking some profits because we're reaching, as this thing outputs, a weekly inflection point? And I'm looking across my grid and I'm easily surveying what's going on with all the usual suspects of the world that I live in, and I'm playing this game the same way. And I'm, if you increase the probabilities of your so-called bet on the markets and you position size properly, the math ends up working out in your favor. And that's all we're trying to do here, is say, hey, we think market profile is a great way to look at the markets. We're taking red and green light signals on whatever time frame we're trading on. I know where the inflection points are ahead of time. I might know where to put my profit targets. I might know where to put my stops based on these tops and bottoms that we're exemplifying right here. Very easy to see. But when we look at time frames above those time frames I'm trading on, i.e. the weekly in this case, when we come up into those inflection points, I may want to either do a contra trade against my current MO on the dailies by waiting for, since I'm reaching so-called support here on the long term, I may want to wait and say, you know what, I'm getting some turn here, I'm getting some green on the lower term time frame levels. I feel like it's okay to nibble here on the long side, and that will be a contra trade against my long-term daily, my intermediate term daily, which I've been acting upon. Okay, jumping forward, let's just take a look at our signal box grid. This is about 10 minutes later, and now we do not see this inflection point glaringly in our face as bottom with an arrow up, because we've actually moved up off of it, and this particular 60-minute bar actually confirmed that and predicted it. So what we want to do here is drill down into our chart again and see that we're coming up off the 1644 area, trading 1651 as of this time. Here's our daily, just to show you an idea what's going on there. We do not have a new box appearing. Remember, these boxes or profiles appear automatically, and that's also reflected in your signal box grid when they appear. So now we want to drill down into our 60 and just kind of notice what had happened last time. We had leveraged our trade off of the weekly unfair lows by that particular value showing up in our signal box grid, and we looked for confirmations that it was okay to go long against that inflection point. And we're now showing that when we cleared 1646, it was okay to go long because we were leveraging off that unfair low on our weekly, 1644 approximately, and when we started clearing our first profiles on our lower term time frames, that was the confirmation we needed to start stepping on the long gas pedal. Alright, so we're trading 1651 as of right now. And I'm just using this. If I didn't have a chart whatsoever, I would be using this. I would be looking for inflection points as they happen on weeklies and dailies and 240s, and using my 60-minute as almost a red light, green light signal based around those inflection points. Now remember, folks, if you're trading on a certain time frame exclusively and your appetite for risk is more weekly or daily signals instead of drilling down into 240-minute and 60-minute signals, then all you got to do is wait. You need to wait for inflection points to happen. Again, to make this as simple as possible, you can choose the time frame you want to make trades on basically and use the red light, green light, stop out or be patient areas to stay in, stay out of trades, stop yourself out, what have you. I'm using them the way I use these on multiple time frame confluence for confirmations against long-term inflection points. One of the mistakes that I used to make as a trader was I would kind of focus on one instrument. I trade the S&Ps all the time, or the 10-year, or whatever. This gives me the lateral ability to scan quite a few things at the same time and notice where the probabilities are in my favor, and literally big risk rewards most of the time. Because, as for example in the S&Ps, what was my stop? We talked about my stop being below 1644, maybe 1640. That's 4 points. All right. Now, what's my targets? My targets are, as I got the confirmation to move up and it's okay to be long, and we've moved off that inflection point, my targets, based on looking at our tops and bottoms here, are 57, which was 11, 12 points higher, 12 or 13 points higher relative to a 4-point stop. And then I've got even higher targets at 77 above these 240 tops. Okay, I've said a lot there. What I'm trying to say is we're trying to find, again, high probability setups that also creates very good risk reward trades. We're also looking at this as if it were a red light, green light system to trade different components on different time frames based on what your appetite for risk and the time frames that your trading plan warrants. If you need any extra instruction on this, we're going to be giving some weekend webinars on this, or maybe some daily webinars on it. I know I've said a lot. I've tried to cram a lot into a 20 or so minute dissertation on market profile combined on how to use this system. I love it. It's my favorite product, and the reason it's been created is basically because I'm lazy. I don't want to look around surf charts all day long, try to figure out all these things using subjective thought processes that I have. I want it to be very rules based, and I want to not miss a trade, and this thing allows me to not miss a trade when it comes to identifying high probability areas. If you're a market profile aficionado too, it gives you those profiles based on our algorithms and puts those out where you can see them very easily. I love this thing. I hope you guys do too.